Americans are seeing gas prices continue to creep up. Those supplies are also going up. So Tom, that doesn't really make sense for anyone who studies supply and demand. So tell us what's going on.
Well, what it comes down to is that Americans were really not in the driver's seat anymore when it comes to our own prices. We're used to the idea that, how much Americans drive is the big determining factor for oil and then gasoline prices. But really what's happened in recent years is that it's American-produced oil. Even though we're seeing a surge recently in a lot more production, it just doesn't set the price anymore for gasoline. It's really our gasoline. Most of it's being priced based on overseas crude, on Brent. It's particularly out of the North Seas, and of course that's being influenced by everything from Chinese demand as well as the potential conflicts in the Middle East. So that's really been the biggest driver for us recently. But we do have prices have started their usual spring climb a little bit earlier this year than in past years.
Yeah, Tom, I mean, look, we talk about Iran a lot. Is this recent spike, is it as simple as just fears about Iran?
No, not exactly. It's that's always sort of that's been an undertone there. But one of the reasons we've been talking to analysts that they're telling us that we're seeing the spike come a little bit earlier this year is that futures traders for gasoline are thinking that this spring, particularly on the East Coast, there's going to be a lot of confusion. There's been in the markets. There's been a number of refineries that have been shut down because they just weren't as profitable as firms wanted them to be. So you've got a real constrained market on the East Coast. So as you switch over to the summer blends of fuel, when it's warmer, there's always the potential for more ozone to be created. So they switch the blends. As they're doing that, a lot of the traders are expecting that there's going to be more chaos, and so that's already sort of being priced in a little bit earlier than normal, and is helping to pull up our retail prices a bit.
So is there anything that the government, the Obama administration, of course, is vowing to do all that they can to produce more oil and gas, looking for cleaner energy options? Is there anything really that can be done in the near future to halt the price hikes that consumers are seeing, or is it just inevitable that those of us who drive are going to be facing those higher prices?
It's inevitable that there's always this spring to summer increase, but really, if you were to bring on more production right now, it's not going to make it into the chain, into the fuel chain quickly. I mean, the idea of the XL pipeline certainly is something, Keystone XL, something that a lot of people point to as a cause, but that's again a project that's going to be a while. So certainly having more U.S. production and more pipelines helps overall, but it's something that takes a lot longer to make it into the price that we pay at the pump.
You know, Tom, we're already seeing the political fallout from this, right? Newt Gingrich comes out and says, "I'll cut gas to $2." Had a couple of Democratic congressmen write a letter to Obama and say, you need to release oil from the strategic reserve to lower prices. So we're seeing the political fallout. Is there any concern within the industry, Tom, that once you start getting towards that $4 level, you will see demand crimp, you'll see the economy crash, that $4 level is a real cutoff, and that those prices won't be sustainable for the producers?
Well, it's a psychological thing where a lot of people that's when you do start to see demand destruction, somewhere around that mark. We've hit it before. We're only about, I think we're about 55 cents short of that right now, and we still have a lot more of the summer driving season to come. So there's certainly concern that that's going to be the kind of thing that will start to eat into demand and maybe even hurt our recovery a little bit. Industry certainly would be concerned about that, but it's at the same time, there's kind of maybe our pain threshold has risen a bit. Maybe we can live with these higher prices. We've been living with them for quite a while now.
And do we expect this to be a hot topic on the campaign trail as that moves forward?
Well, it's clear it is. I'm not really a politics guy, but I know Newt Gingrich came out with a 30-minute, not 30-second ad today where he talks about this. Obviously, it's going to be a topic tonight at the debate, and I guess President Obama is going to be touching on the subject pretty extensively tomorrow as well, from what I understand.